Welcome back to another episode of the Breaking Bitcoin Market Update. My name is Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. Today is March 2nd, 2022, foul year of our Lord. Hopefully you guys are doing absolutely fantastic wherever in the world you happen to be tuning into the show, and however you happen to be watching us, whether you're catching us on YouTube, Twitch, DLive, Travago? No, it's Trago. Yeah, one of those. Trollo? Yeah, that new one. It's a decentralized one. DLive, Twitter, or Facebook Live. I think they're called Meta Live, but we're going to keep calling it Facebook Live. Anyways, we've got an exciting day in the markets today. Bitcoin having a nice upwards rally and push up towards resistance over the last few days. Today stalling out. Altcoins are a mixed bag, some continuing their race, some pulling back. And we're kind of getting about 50% of that overall with our current trades up about 13% P&L overall today. In today's episode, we're going to be a brief one because we've got a mentoring session coming up today. But we're going to briefly touch on the markets. I'm going to showcase something on the monthly chart that I noticed this morning that I've kind of been keeping my eye on. But this monthly close, I think, will be very deterministic for where Bitcoin goes in the future. I'm still not definitely... we have to keep in mind the obvious decline, but we'll get over to the charts. I think that's the best way. We go over the charts. I think I'll show you guys, and it'll make a lot more sense when we apply the charts, when we apply what we've experienced in the past, and we just apply systems trading methodology to what we're doing. Big shout out to all the premium members who make this possible, as well as everybody in the Discord and all the subscribers. So if you're new to the channel, make sure to subscribe for daily market updates, as well as trade recommendations and technical analysis. We also teach people how to pine code. This channel is all about teaching people how to trade and focus their efforts into something that will return good results, which is actually trading the right way, not based on discretion, not based on whim, but off of systems. So we're going to focus on that today. In today's premium mentoring session, which is coming up for all the premium members, we're going to talk about utilizing TradingView alerts to help make your trading easier. And we're also going to go over how to automate strategies utilizing 3 DCA bots. And we're also going to use the super duper DEMA strategy, one of our most popular automated strategies, on how to do that. So I've actually got that setting up now and nicely. I've had it running on Bybit. I also have it running on KuCoin now, and it's working beautifully, right? And we'll go over some of the limitations in doing that. There are some options that you won't be able to do. For example, like the 50-50 method of profit taking, you will have to do all in, all out. We'll talk about how to manage your stop loss on TradingView. We'll also talk about how to manage your stop loss on 3 commas. So all that's coming up in about a half hour for the premium members in our private mentoring session. So anyways, let's get over here and let's do it. All right. You know what I don't like? I don't like how there we go. I don't like how dark I look on the webcam. So maybe I'll have to order a new webcam, because I did get the ultra wide monitor, so I can't really do the monitor across the screen, or excuse me, my DSLR camera across the screen. So, whatever. We'll see. Anyways, shout outs to everybody watching. Hopefully you guys are doing absolutely fantastic. Cheesy Business H20, Dave Rice, Forex Meister, Chart Me. Good to see you, my friend. Okay, so the first thing I want to talk about is, let's actually, let's switch over to this one. There we go. And let's do this. Okay, I think I want to focus on this because this is just a little bit clearer, and we will go ahead and hide that for right now. All right, so we've got the monthly chart on Bitcoin pulled up here. Behold the power of the ultra-wide monitor. So hopefully this looks quite nice. And I wanted to just point out the correlation. Obviously, the primary narrative that we've been basing our trades off of, kind of our long-term positions, has been off the weekly chart. And as we've talked about many times ad nauseum now, after Bitcoin reaches a cycle high, it corrects back down to the 200 period simple moving average, following correction down to the 55 and the 100. So we've talked about the dynamics of how price interacts at those levels, what we can get, and the tradable expectations. So here we go, just a good example. In the high of 2017, we reached that cycle high, correction down to the 55 bounce. We actually got a double bounce here, but continuing lower highs, down to the 100 bounce. And then again, as I mentioned, consolidation at the 100 weekly exponential moving average was bearish, broke bear, and took us down to the 200 simple. Same thing happened here in 2019 when we corrected down to the 55, bounced down to the 100, bounce, and down to the 200. And what are we experiencing now? Down to the 55, up, down to the 100, and sideways consolidation, which is historically broken bearish. Now, I want to point something out because here on the weekly chart, we did get this nice oversold territory and kind of potential buy signal from time transformation, which lined up very nice with this last buy signal that we got back in July of 2021. So after the summer meltdown, the 50% correction down to the 55, followed by a brief rally to a new all-time high. I mean, not brief, but briefly reaching a new all-time high before descending down into the bowels of El Diablo, where we find ourselves right now. Now, Bitcoin, we have to point this out, right? Because everybody's gotten like really excited and lost their heads. Everybody seems to be kind of very confused about the markets right now. And the markets are always confusing, right? There's like the markets, people talk about how, hold on a second. We've got Forex Meister. Big shout out to you, man. Thank you so much for the 23 consecutive months, my friend. You are the bomb, dude. Thebomb.com. And Ashwin, thank you so much for the subscription over there as well, my friend. Thank you guys for all the support. So first off, we have the interest rate hikes. This was the narrative. The interest rate hikes, the inflation hikes causing the markets to correct. And this was the big thing. This was no surprise, right? The market's pricing this in. And then we even displayed the data on a previous show about how typically when we do get rate hikes, the market performs well. Okay, the market tends to perform very well. I'm talking about traditional markets right here, of course, but traditional markets tend to perform exceedingly well in the years that rate hikes actually come, and they often correct in advance of the rate hike. So the market prices in future data. The market is the most efficient pricing mechanism in the known world. So we have the exact same situation here. Now, sideways consolidation, I'm getting off track here. So that was the narrative. Then we have obviously the Ukrainian-Russia situation and the markets, so traditional markets, American markets anyways, as well as cryptocurrency, responding very positively to that. And many narratives are revolving around that. Well, Russia's buying Bitcoin in mass so that they can bypass sanctions. Ukrainians are buying Bitcoin in mass so that it's the easiest, most portable transfer and store of value that they can utilize trying to flee the country and things like that. But the reality is like those things don't move the market. Retail traders only account for anywhere around 3 to 5% of large capitalization markets. Now, cryptocurrency obviously being more the most risk on asset that there exists. That number might be slightly higher, but when we're looking for these big movements that move the market, it's not retail. It never is retail. Everybody thinks that it's retail or small people like buying a Bitcoin or something like that. It never is. Bitcoin monetarily, anyways, has become institutionalized to a large degree, which makes it there's good and bad things to that, right? The one narrative is that okay, well, you've got lots of institutions holding on to Bitcoin. And so that is going to damper down volatility and make this a safer investment. And now that we have so much institutional money involved in Bitcoin, they're going to do what institutional money does, and they're going to pump their own bags over decades, right? This is what institutions do over long terms. But the other narrative, which I find more appealing, is that institutions have no qualms about puking their highest risk assets in order, right? So, for example, I recently finished up some contractor work on my house, right? And I had to pay quite a large sum of money to get all this work done. And so when I went to liquidate some of my assets to pay for this purchase, I started with my riskiest assets first, right? So I went all the way down into my deep shit coins, and that's what I puked first to pay for something that I needed in the real world. I didn't sell my Bitcoin, I didn't sell my Ethereum. I reached down and got rid of like my Holo token. I reached down and got rid of like well, let's see here. To pull up my list. I sold some Dogecoin. I sold some Shiba Inu, right? I sold like the low cap stuff. So it's the exact same thing. So large institutions are holding Bitcoin as likely their riskiest asset on their balance sheet, and they're certainly puking that before they're puking Apple stock. Okay. But so anyways, we had this nice double bottom structure here in Bitcoin, and everyone sees these, a little bit of green, and here I don't want to. It's tough being. I'm not gonna lie. It's cryptocurrency has been very good to me, but being an analyst is, I'll give you guys this one thing, as one trader to another. If you focus on trading well, right, like Denzel Washington, or excuse me, not Denzel Washington, but Will Smith has this fantastic quote about, building a wall brick by brick, right? You don't focus on building the wall, you focus on laying one brick at a time as perfectly as you can. And the same is very true of trading, right? If you focus on the outcome, right, which is pursuing money or being right, that is the most dangerous thing that you can do as a trader, right? You need to focus on finding high quality setups, understanding your own personal methodology of trading, understanding your risk profile, how you can trade sustainably. That's the big trick. Like there's lots of ways to make money in the markets, but you have to find a way that works for you, that is going to be sustainable, and that is going to depend on your personality. That is going to depend on your time availability. That is also going to depend very heavily on your capital, right? What are your, again, that all kind of comes down to time and risk profile. Those are the main things. Like how much time do you have to trade, and what is your risk profile, right? Your personality is also going to influence how you want to trade, right? Some people really like instant gratification. Most people like instant gratification, so they go into day trading, and most of them lose money. The majority of individuals who are able to control their emotions, delay gratitude, delay expectations, delay instant gratification, and have a longer term mindset, typically are the ones who do well in this arena. The individuals who are patient, who can kind of see the big picture, who can develop a strategy and then execute on that strategy consistently. That has certainly been one of the biggest keys to my success. So, it's easy to get super excited down here because we've got this kind of nice double bottom we've got this nice double bottom formation. We got the oversold. And the question is, like, have we already seen the outcome of that movement? Because if we flip to the monthly chart, we see a slightly different picture. So this is the monthly chart of Bitcoin on Bitstamp. So going all the way back to 2011. And I wanted to point something out here because we see the 55 monthly exponential moving average working exactly like the 200 weekly simple moving average on the weekly chart does. Lest I repeat myself. So we can see Bitcoin finding its bottom at the in the territory of the 55 monthly EMA. We can see it here, here, and here. So the exact same areas where we did find those bottoms back on the weekly chart. And we don't really see the same dynamics here as far as the 55, 100, 200 kind of progression that we do see nice and clearly on the weekly chart. But something that's very interesting is the Fisher transform. We can see that following, this is one of my favorite indicators, but we can see that following, let's actually scroll over, following market highs, when we actually get the Fisher transform crossing below the zero line and going into negative territory, that is when, the first half of the bear market is over. And we tend to get a small relief rally, but the other leg, the larger leg of the correction and the ultimate bottom is yet to come. And we can see this happen with only one correction here. And even then, you can. So hold on, let's go over the good ones first. So here, when we cross below the zero line in 2014, it's actually good because this month closes as an up candle, and so we're able to basically short the top. And we experience a 74% correction. Then when we cross above the zero line, here we go, and above the 21 monthly exponential moving average, that signals the real bull run upwards of 5,831%. Here we get these continuing, and I want to point this out because one of the downsides of the Fisher transform is that, and this is true of all momentum oscillators trying to call tops on cryptocurrencies and highly volatile assets, you've got to be very suspicious about sell side signals because as we can see, we get multiples of them, right? We always get multiples of them. There's really no good way around this. I've tried all kinds of top and roofing filters and smoothers and just about everything that you could possibly think of. And if you do that, if you solve the problem of actually trying to catch the top, then it throws off the entire rest of the indicator, and you no longer have a good indicator for catching bottoms or for identifying trend shifts. It's a fruitless goal. Like calling tops is impossible. It cannot happen. Technical analysis can really help you pinpoint bottoms. It's really good at that, and it's really good at letting you know when the trend is shifting from bullish to bearish, and it's good at confirming what you're already seeing on the charts. But as far as calling the absolute top, it's almost impossible with a regular momentum line cross indicator. It's just not going to happen. The best that you can do is look for confluence of exit signals. And personally, the best one that I found is bearish divergence. Bearish divergence on a momentum oscillator is one of the best usable, practical top calling systems that you can use. Now, if you're not trading these big swings like this, obviously this is the monthly chart, so we're really trying to catch the cycle, right? The big cycle. We're not day trading and we're not swing trading here. This is positional investment. This is portfolio trading right here. But we can see here that we get 4 sell side signals during the run up in 2015, 2016, and 2017. And the last one, the one that actually calls the top, is when we get bearish divergence. So you can see here, we've 1, 2, 3, 4, but no divergence until that R label. We can see here that price makes a higher high, but our oscillator actually makes a slightly lower low. So bearish divergence there. But look, as I said, look how good the bottom detection algorithm is. Look how good catching the bottom is here, right? It's really good. And again, it does a fantastic job over here as well. Like calls almost the absolute bottom on the monthly chart. All right, no repainting, no go backs, right? This, by the way, this indicator is available to all our premium subscribers. It's a fantastic tool. It does work on all time frames. It's really, really good. It modifies and adapts to all time frames. We cross the 0 line here, and we do have drawdown. So we do have to sit through. That sucks. It's a 30% correction if you were to short the market here, all right? And if you're using leverage if you're using more than 3x leverage, then you likely got liquidated. But we do ultimately get a nice big correction down here, 24% on closing basis, but on wicking basis, a 53% trade. So, the question is like, just what can you sit through? What can you stomach? And again, we cross above the 0 line here, cross above the 21 monthly exponential moving average, and we get that second stage of the bull run there. Another only 538%. So what's interesting is let's see here. So from bottom to top here, we got 7,800. But I think I measured from the breakout. So from the breakout up, 5,116%. From the breakout up, 594%. So a magnitude of so an order of 10 less, right? An order of 10 less. Which makes me wonder, will the next breakout only be 50%? Likely not, because if we go look at the power law corridor, which has been very, very good at detecting Bitcoin market highs, there is logarithmic growth to Bitcoin. So from here to current resistance, according to the power law corridor, we have 192% price appreciation, which is still, like the exponential growth slows over time. And it's true of all investment assets. This isn't unique to Bitcoin. This is true of all investment assets. Okay, but what I wanted to point out here on the monthly chart is that as we can see, every time without fail that we cross below the 0 line, we have a further 40 to 50% correction. And if this monthly candle closes the way that it is, then we will have 2 consecutive months below the 0 line. Okay, 2 consecutive months below the 0 line. So something to consider. Something to consider, because again, that correction is a 44% correction. Now, I do like the monthly 55. It is giving us a price target of about 24,000, 25,000, as opposed to the weekly 200 simple, which is down around 20,000. So I've been saying this for a long time. Where's the bottom on Bitcoin? 20 to 25,000, right? On closing basis. It is very possible that we could experience a situation like March, or a situation like back over here in 2015, where we actually put in a weekly or monthly big wick down, right? Who knows? Who knows? But just things to consider. Things to consider. Those are the downside potentials. I always view the downside potentials first before I consider the upside potential. We already looked at the upside potentials. 192%, 120,000, 130,000. Okay. Daily time frame. All right. So we ended up taking the long position on Bitcoin yesterday because we did get all this. So my primary PTP strategy, we did take the long trade yesterday. Getting a little bit of a pullback today. If we continue on here with more red, we're gonna have to reevaluate that position. But that's okay. We've got other positions that are kind of countering that right now. But we see this as well. But we want to point out the negative too. Bitcoin's coming up to resistance, volume node resistance, multiple highs at this level. We've got 1, 2. This is our third test of this resistance zone. If you rule this out, this would be the fourth test. So we have a first test and a rejection, and then we come back up, test, reject, put in a higher low, and then come up and test again. All right, so what I'd like to see here ultimately for bull side Bitcoin is sideways consolidation for maybe 1, 2, 3 days, and then a breakout, right? That's what I'd like to see. If we hold resistance, if we just consolidate up here at resistance, typically a bullish sign, as long as we break to the upside. So things to watch closely. If we end up rejecting from here, then the best case scenario is that we do hold previous resistance right here, basically this new level of support, that we hold the Donchi and we take the reversal baseline bounce trade to the upside. And that would be confirmation that we have entered into a bullish trend, because that'd be our first successful long pullback buy. And then we kind of go into full bull mode territory, where I turn on the fast, high frequency, lower time frames, buy everything that's oversold. That's where you go, right? When the bull market's in, you get risky. Okay. All right, so we gotta hurry. I only got 10 minutes until the mentoring session here for the premium members. I apologize for kind of the lack of streams lately, guys. My daughter's been home sick from school all week, and any parents out there just knows that it's impossible to get anything done when your kid's in the house, man. 3-hour time frame. Let's get rid of the VPVR here real quick. We've got the super duper DEMA strategies been relatively quiet on the 3-hour time frame here for BTC USDT. We did get this nice breakout, but the system did not take it. We're going to need a price retracement below 41,420 now, and then a pop back above. But holding the 200 double exponential moving average down here at 40,000 would continue to be a nice bullish sign. Here we are again in this redistribution zone. So let's see if Bitcoin redistributes to kind of misplaced retail long traders right here, or if we actually get this nice breakout, we break through this resistance level. This is just a very interesting and kind of tricky time in Bitcoin, right? There's nothing wrong with taking a short from these levels, right? You guys know that I already did this. The daily time frame flipped, so I got kicked out of that position. But listen, this is just an obvious fade the breakout trade setup, all right? So I'm not going to fault anybody who's doing that. It just makes sense. Look, resistance, you short resistance, okay? Now, this is our fourth test of resistance, and the more we test resistance, the weaker it gets. The more you test resistance or support, the weaker it gets, because the more that bulls show that they're willing to continue buying at these high prices, then sellers are going to say, well, why do I sell here if I can get these suckers to come up here? This is auction market theory. This is how you get the markets to bid up. So, okay. 3-hour time frame here. We did get some sell side pressure here and bearish divergence from time transformation. Again, as I said, when we're in a strong uptrend, you want to be a little cautious of those sell side signals. But again, we did get that bearish divergence, so we'll see if we can actually get a little bit of a correction out of here. Maybe hold the super duper DEMA level here at about, or the super trend level here at 4130, or excuse me, 41300. And actually push for the break off, right? So basically, we would want to hold this previous support level that we broke down through. So established buyers in here, they didn't take the opportunity to sell at break even, or those who didn't. But the other thing too, and this is bullish for Bitcoin as well, a lot of the individuals, and this is coming from Santiment and Glassnode, we had a lot of buying obviously up here. Let's put on volume so you guys can see. Okay. We had a lot of buying up here in the $69,000, $77,000, $69,000 area. According to Santiment and Glassnode, a lot of those holders have actually sold, right? So a lot of the people who actually bought here have now sold, and we've had stronger conviction buyers step in and buy, which is good, because it means that if price does break out here from this consolidation area and starts trading much higher, then all those position sellers don't exist, right? All those people who might want to sell up at these price levels, they don't exist, right? So that's the worst thing that can happen, right? So this is something to understand. If you are, a lot of people are going to buy at areas like this and end up getting stopped out or selling down here. But so that when the ones who don't sell, if you buy here and then price goes all the way down and then comes back up, you want to get out at break even. That's why resistance can happen. Resistance can be very hard to overcome when you've got a lot of position sellers, and then price puts them in drawdown for quite a while, and then price comes back up to their to an area where they can get out scot-free. So this is very important to understand. So this is a danger if a lot of those holders were still holding at these price levels, like people who had bought up at these price levels. But according to Sandeman and Glassnode, most of those people are gone. So if we do break out here, then I actually think we could do quite well. We could completely revert that monthly chart and do well. You know, I'm always going to be cautious, guys. It's probably, you know, I get ragged on sometimes because I'm too conservative. They're like, oh, you know, why do you hedge? Why do you protect yourself? Why do you use position sizing? I don't know, because I want to trade for years, because I don't want to blow my account up. You know, I'm too old for that shit, man. I'm too old to go do something else. Let's see here. Roycoin, the super duper DEMA is available. Yeah, it is available. Yeah, we've been using it for a couple months now. Yeah, it's great. In fact, here we are. In fact, I just made a couple structural updates. I haven't published these updates yet, but I have added in this nice graph up here that just is a custom backtester display. So we get total trades, win rate, starting account balance, ending account balance, your average run up. So, you know, I'm still working on what metrics to put in here, but average run up I think is important. So it lets you know for all the by the way, Selahattin, thanks so much for the subscription. I appreciate that. It lets you know what was your max profit that you could have gotten, right? So what I do is I do a for loop. I go through every single trade in the strategy tester. I take all the run-ups, right? I look at all the run-ups basically for each trade, so I can identify from the entry to the exit what was the max point of profit that I could have taken. That's not the profit that I actually took, right? And likely, because for this strategy anyways, it's not selling the highs, it's waiting for the trend to reverse so that it can get a bigger trend. So here's a good example, right? So right here, here's an entry. Here, let me switch the color of this to black. Okay, so we can see a long entry right here on the super duper DEMA strategy, and then we see the trade closes out right here. Okay, so at this point right here, this is your max run up for the trade. This is the area at which you could have gotten the most profit. And so if you analyze a large series of trades, what you can do, if you analyze a large series of trades, you can identify what your average run up is. And that's what I've done here. I've identified the average run up. You know, it's kind of silly looking at the max run up, like what's the most I could have got. But on average, what was the average max, right? What was the average max? So then you can utilize that to try to figure out your best profit taking strategy. So you can pull the most, you can extract the most profit out of your strategy as possible, right? And then max drawdown, all right? So what I do like about this is a strategy running on the 45-minute time frame for Ethereum USDT. And we'll look down here at the strategy tester results. And here we go. Let me hide myself. Boom. So here we go. Not too bad. 45-minute time frame. This is a nice profitable strategy. It's got a nice consistent upslope. There are some, and we're going to go over this in. This is a long only strategy. There are a bunch of things that we can do to make this strategy more profitable, like utilizing 50-50, for example, and let's see here. Let's see if we take this off. Yeah. So if we take the baseline cross off, we do almost double our profits there. And then, yeah. And then we'll go all in, all out. There we go. So there are some limitations though, because we utilize 3 commas to automate this strategy, and 3 commas will not allow us to do split profit taking, you know, like super easily. So Vinco001, thanks so much for the sub, man. I highly appreciate that. So there's yeah, there's limitations, and so we've got this. This is the version that we have running right now, and it's really good. So, or excuse me, this isn't the version that I have automated. This is just some different stuff that I'm looking through for the indicator. The one that I actually have running is with the DEMA, and we've got enable take profit, and I think it's at 1.5. No, it is 3. There we go. So, all right. Okay, it is 1:59. All right, there's so much more I could talk about, guys, but we're going to have to cut the stream off a little early today, unfortunately, so that I can go do today's mentoring session. Just give you a quick look at my active P&L right here. Zoop. Okay. So yeah, took a few positions yesterday. Yeah, overall, pretty cool. All right, sorry, I didn't see any of this. Cheesy Business H20, sorry for not seeing your question, man. The mentoring session is going to be recorded. I'm doing my best to record all of them. And I just last night uploaded the 2 from February that we did. What exactly do I watch on Glassnode for this to say? So there's hodler waves, and then there's short-term profitability and long-term profitability, where it can show you the date of coins moved. And if they haven't moved for a long period of time, you can see hodlers. And if they've moved in a short period of time over the last 90 to 30 days, then they're short-term holders. And we can see a transference of coins from short-term holders to long-term holders. Hodler wave shows this too. Let's see here. Yeah, so we do have the Roy coin. The lowest tier we do have is essentially just the indicators in our basic educational material, and that's pretty much the closest that we can get. That's basically the closest that we can get to, and that allows us to package the education with the indicators as well. So, all right, guys, sorry to cut today's stream short, but I will be back tomorrow, and I just wanted to give you guys an update. So let's right over here. All right, thank you guys so much. Woo, hi. Oh, that's like a little too low. Anyways, thank you guys so much for joining me for another episode of the Breaking Bitcoin Market Update. A lot of exciting things in the market going on today, and we'll be back tomorrow with another market update. So I want you guys to trade safely. If you guys have any questions, comments, concerns, sarcastic remarks, or death threats, hot stock tips are also acceptable. Leave them in the comment section down below, or join the Discord. The link is in the description below, but it's just discord.crackingcryptocurrency.com. Type it into your browser, join the Discord, and keep the conversation going long after the show is over. And if you guys would like to improve your trading with our online trading academy, designed for everybody from any level of trading, from a seasoned professional to complete beginner, to learn how to build their own trading strategy from the ground up, so that way you don't have to rely on anybody else, and you know exactly what to do when the market moves. But if you would also like access to our buy and sell alerts, our indicator strategies, our premium indicator suite, all available on TradingView, as well as our Pine coding courses, all that stuff is available at the website, including our mentoring sessions. Just tons of stuff. I don't know, it's tons of stuff. But we will be back tomorrow with another exciting episode, and I will see you guys on the next one. Until then, trade safely, and don't forget to smash the like button, guys. Thanks so much.